On to your markets news now. Asian markets were said to be mixed and jittery on the back of NATO member Poland experiencing a bomb blast yesterday, which claimed the lives of 2 people. Initial reports suggested that this blast was initiated by Russia, but it remains unclear who exactly was responsible. More peculiar to China, there are concerns following data released there showing a decline in property prices. Japan ended the day on a positive note. The Nikkei share average ended the day up 0.14%. Hong Kong and Chinese stocks, however, were on a downer, the Hang Seng Index declining by 0.47%, while the Shanghai Composite Index fell by 0.45%. Over in the United States, the S&P 500 gained on Tuesday, fueled by softer than expected inflation data. This raised hopes of a pullback in rate hikes by the U.S. Federal Reserve, but reports of Russian missiles crossing into Poland sparked volatility in the latter half of the session. The S&P 500 gained 0.87%. The Nasdaq Composite gained 1.45%, while the Dow Jones Industrial Average rose by 0.17%. The JSE is mainly firmer at this hour. The all-share index has gained 0.4% to 73,317 points. Financials have added 0.3% to 40,418. The industrial 25 index is 1% higher at 88,547 points. Markets in Europe are mainly weaker. Britain's FTSE 100 slipping by 0.4%. The Paris CAC is down by 0.5%, and Germany's DAX has declined by 1% to 14,241 points. Looking at commodities, gold is trading at around $1,782 and platinum at $1,017 per ounce, while the price of Brent crude oil is running at around $94 per barrel. The rand is trading at 17 rand 22 against the US dollar, 20.50 to the pound sterling, and 17.94 against the euro. Let's get into the markets now with Chantel Marks. She's the head of equity research at F&B Wealth and Investments. Thanks very much for joining us, Chantel. So markets are looking a bit mixed today. Our local all-share index trading in positive territory for now. To what extent is Russia's alleged accidental bombing of Poland, which is still yet to be clarified, to what extent is this going to create further jitters on global markets from a geopolitical point of view?
So it definitely created jitters overnight. And I mean, as you showed in Asia this morning, there was still a lot of uncertainty. But I think that uncertainty has started fading a little bit. The US President Joe Biden came out a little while ago saying that it now seems as if the missile was actually deflected by Ukraine and then unfortunately ended up in a village really close to the Ukrainian border within Poland. Where the missile comes from, that remains to be clarified, but it does seem as if it's not necessarily anything to be overly concerned about regarding an escalation of the current military action in Ukraine, or perhaps even a spillover into Poland. And because of that, you have seen markets that are open currently actually moving up quite nicely. And I believe US futures are also pointing to a positive open in the United States today.
So in terms of the overarching themes that have come out of the G20 meetings in Indonesia, what are the key things that have stood out for you, especially on the macroeconomic front?
So I think that the geopolitics is actually a really nice segue into this question. The geopolitics really regarding the Russian-Ukraine war really dominated the agenda. And then also the relationship between the United States and China was really in focus as well. There were some reportedly fruitful talks between US President Joe Biden and President Xi Jinping from China. And of course, a solid footing between those two countries would be risk positive. It would be positive from a markets perspective, because there's a lot of volatility and uncertainty relating to some of the stranger tactics or economic warfare that has been taking place between the US and China. I'm thinking specifically the US blocking Chinese technology into some of their hardware and things like that. So I think those were dominating themes. There was a statement made on the Russia aggression in Ukraine, although the wording was quite broad or loose, if I can put it that way.
Yeah. Chantal, let's just take a look at retailer SPAR. They reported operating profit up a mere 1.1% at 3.43 billion rand, and it halved its dividend for the year ended September to 400 cents a share. And it doesn't look like the market liked this particularly, that share price coming down by about 10%. What's your reading of everything that's going on in terms of the performance and why the market reacted in the way that it did?
Yeah, it was actually quite an interesting result. So if you looked at sales or the top line, that actually beat expectations. But rising costs, particularly in South Africa, had a very big impact on their margins. So SPAR, being a distributor and a wholesaler rather than a pure consumer-facing retailer, was really battling with things like logistics costs on the back of a massive increase in fuel prices, for example. And that resulted in them coming under some pressure from a margin perspective. They're also in the process of turning around a struggling Poland business that they purchased a couple of years ago. And that business is still loss-making, which further detracted from the result. Although that was a little bit more palatable, I guess, than the disappointment on the South African side. In terms of the dividend halved, we did expect the dividend to come under pressure because they're busy with a big IT rollout. But the extent to which that dividend was cut was a little bit larger than anticipated, I think mainly because of the deterioration in profitability. The outlook statement, also pretty miserable. And I think that a combination of these factors led to the share price decline, perhaps investors or holders of the share losing a little bit of hope of that looming turnaround in SPAR.
Chantal, just looking at retail more widely, the retail sales number came out for September. That's for the month of September and also the quarter. For the quarter, sales declined by 1.9%, and in the September month, they declined by 0.6% on a year-on-year basis. What's your analysis of that?
Well, I'll have to have a closer read at the exact print to see where the disappointment was coming from. But retail sales have generally been quite volatile over the last few months. So you have a combination of sharp price increases, perhaps keeping consumers away from the stores, along with higher interest rates. And then there's also some specifics within the categories that are quite interesting to note. So, for example, hardware sales have come under a lot of pressure over the last year or so, and continues to weigh on that retail sales number just because of the massive base that was built during the COVID-19 pandemic, where people were at home doing a lot of DIY projects and the like. So I'll have to unpack it a little bit more, but not surprising that we are seeing a slight dip in retail sales.
Chantal, always a pleasure talking to you. Thank you for your contribution there. Chantal Marks, she's the head of equity research at FNB Wealth and Investment. We're going to go for a quick break.